What's up, you guys? Michael Elefante here. Today is a unique episode and certainly very special to me and to my wife as well. For that November 2020 is the first month that we are technically financially free. And by financially free, I mean our passive income or cash flow from our investments has surpassed our monthly living expenses and or our lifestyle. And know what's even crazier is this actually comes only 12 months, pretty much exactly 1 year after making our first ever investment in real estate. Now every month, for the past several months, I've been doing what I call a cash flow report, in which I provide full transparency, all the numbers down to the penny from all of our investments and what we make in cash flow each month, and then further break those numbers down and talk about, truly building our wealth or net worth long term. So we talk about the principal pay down and the appreciation as well, and how all those numbers factor in. So if you guys hang around till the end, I'm going to disclose all of these numbers to you and tell you exactly how much we made in passive income, and even better than that, how much we grew our net worth in the month of November. Now, I'll say it again, I've said it many times before, my goal is to come on here and help others achieve financial freedom, help others create passive income, cash flow, invest in real estate, and really just better their lives through investment and personal finance and things of that nature. So I hope you guys do appreciate the transparency. Again, I'm not on YouTube to just tell you how much money we make. I'm on YouTube to show you that it is possible for you to do it too, because again, 12 months ago, this would have seemed so far-fetched and so far out of our dreams. It's really wild that it happened so quickly. So I hope to encourage others out there to jump on board and just dive in head first, because what I'm about to talk to you guys about is totally possible for any of you watching out there, I promise. Now, before we begin, I do have an ambitious goal of growing this YouTube channel far beyond what it is currently today. So if you guys haven't subscribed and you find value in this type of content, please subscribe below. I do appreciate it. And if you find value in this video in particular, please hit the like button below and drop your comments. It actually really helps with the YouTube algorithm and promoting this content to other people like yourself who may have interest and get value from it as well. So if you guys don't mind, subscribe, like, comment below. It really means the world to me. Thank you guys so much. Now, this did not happen overnight for us. We started working, both my wife and I, in 2016, full-time in the workforce, and we were both each individually making less than $35,000 in W-2 income, pre-tax, pre-investment, all that good stuff. And that was honestly a struggle to live on at some points, because we had our apartment to pay for, we had other living expenses. So that ultimately got us thinking, how can we take the money that we're making today, invest it to better our futures, and eventually reach financial independence, financial freedom? So ultimately, we decided to budget our money down to the penny every single month, and we realized that we could not save our way to wealth, especially making the money we were making at the time. So we had two things to focus on. One is invest as much as possible and save up for more strategic investments down the road, like real estate, which I'm going to talk to you more about today. And number two, and probably more importantly for a lot of you guys watching, focus on your earnings. Again, you can't save your way to wealth. So if you guys can earn a little bit more each month, whether that's through a side hustle, whether that's through eliminating certain expenses, after you keep a monthly budget, and maybe you eliminate dining out altogether, or at least 50% of the time you dine out, and you could save a few $100s just right then and there. So the more money you have to invest, the faster you guys can achieve similar types of numbers and similar types of passive income in your own lives. Now, each year, I think this is very important, is we did not become complacent. So once we felt like we were kind of capped out in our current role at each job that we were in, we either spoke with our managers and sought after a promotion, but it wasn't like, hey, promote me. It was, what do I need to do to earn the promotion or earn the pay bump, earn that extra commission, earn the bonuses, whatever it is. And once we felt like we maxed out that role and we kind of reached our limit, we wanted to challenge ourselves. So we started applying for other jobs, and we ultimately hopped around a few times between Dallas, Austin, and now Nashville. And we have substantially increased our W-2 income each year collectively. And again, we're still not really changing our spending habits. And that's really important, because if you don't change your spending habits drastically, as you guys make more money, then you'll be able to save substantially more each month you make more money, or each pay raise you get. That's the biggest fault that I see a lot of people make, is they get that big promotion, they work more hours, of course, but they start making a lot more money. They buy the nicer house, they buy the nicer car, they go on the nicer vacations, they do all these things, and that money just comes in and goes right out the door. They're not spending it on assets, they're spending it on liabilities, things that cost them money. They end up going into debt, and honestly, some of the poorest people that I know make the most money each month from their W-2 paying job. The biggest issue that they have is they don't know an asset from a liability. So what I want to encourage you guys to do is invest in assets and don't spend your money on liabilities. Assets put money into your pocket each month, liabilities take money out of your pocket each month. And that's ultimately how you guys build long-term wealth and build up your net worth over the course of time. Now fast forward to October 2019, the very tail end of the month of October last year, we closed on our very first rental property. Now we had gone back and forth about long-term rentals versus short-term rentals. Maybe we can get into wholesaling, all this other stuff. But here in Nashville, the tourism market was hot, obviously pre-COVID, and it'll start to pick back up here in the next several months. So we ultimately decided to go with a short-term rental. And we had found quite a bit of success. It's been a little bit of a bumpy ride through COVID and the lack of tourism and things like that. But since that day, I think it was October 26, 2019, we have acquired 2 additional properties and we're in contract to close on a 4th in December 2020. So today I'm going to review our November cash flow or passive income, and then also talk about the appreciation numbers and the loan pay down or principal pay down, which is our equity position in the house growing every month. And I will tell you guys exactly how much we got from those 3 properties. Now first, let's look at the cash flow, because ultimately that's the most important figure in achieving financial freedom, right? Having enough income come in each month, somewhat passively, to pay for our lifestyle, right? So let's dive right into how we calculate this cash flow for all 3 of these properties. So for the first property I'm going to talk about, this was actually the first property we ever bought, short-term rental that we rent out on Airbnb. In November 2020, we had 4 total bookings. So honestly, a lot less than we normally would have if there was full travel, full tourism in Nashville. And the revenue total from that was $6,757.02. Now that's not our cash flow, because we need to factor in our expenses. So our operating expenses, this includes everything that it costs to operate the property, pretty much minus the principal and interest that we're paying on the loan to the bank. So it includes taxes, insurance, utility bills, cleaning fees, all sorts of good stuff like that. And that totaled $2,242.34. Now we factor in our principal and interest, which is our debt service to the bank. And that totals $2,258.42 for this property. So we take our revenue minus all these expenses, which brings us to a net cash flow or net profit or passive income of $2,256.26. All right, for the second property that we acquired, we bought the property, I think in May 2020, we closed on it, and it has been doing pretty well for the most part. This one is closer to downtown, and we had 5 total bookings in November, and the revenue totaled $6,260.77. The operating expenses were $2,033.52, and our principal and interest to the bank were $1,667.20. So now, again, we're going to take our revenue minus all our expenses, and our cash flow for this property is $2,560.05. All right, now for the most recent investment that we did, and we closed in September. We rehabbed this property. It's in the mountains. It's in Gatlinburg, Tennessee, and it has just exploded beyond our wildest expectations. And what's even crazier is after we talk about these numbers, it's going to be even higher in December. We are booked solid in December, so I'm excited to do the December numbers again next month. But for the month of November, we had 7 total bookings for this property. The total revenue was $14,158.85. Our operating expenses totaled $2,180.85, and the principal and interest was $2,053.72. So again, we take the revenue numbers minus all of our expenses, and our cash flow, our passive income for this one property alone was $9,924.28. So what we're going to do is take all 3 of these properties, we're going to take the cash flow from each property to add up to get our grand total cash flow, or the passive income that we earned from our real estate investments in the month of November. And that number adds up to $14,740.59. Now, if you asked me a year ago, we were gonna make over $14,000 in passive income from real estate before we ever made our first ever investment, I would have told you you were crazy. And I tell you this because I'm probably in the same shoes a year ago that you are in today if you guys haven't invested in real estate yet. And you may think it sounds far-fetched, but I promise you it's really not. It's doable for anybody. My wife and I truly believe that if we can do it, you guys can do it. Now, this number is the first month that has exceeded our monthly expenses, and it has drastically exceeded any passive income that we've had in prior months. So the total expenses personally for the month of November added up to $10,545.23, making us financially free for the first time ever. And I know what some of you guys are thinking, oh my gosh, you spend over $10,000 in a month? No, not normally. It's normally half that amount, but this accounts for, several $1,000s in Christmas gifts, and over $1,000 in charitable donations to a charity that we are, passionate about, and donated some money. So our normal monthly expenses ranges from $5,000 to $8,000 a month, but this month, happened to be a little bit more. Now, while cash flow is essential to achieving financial freedom, right? Your monthly income from your investments exceeds your monthly living expenses or lifestyle. We need to talk about the other benefits in real estate, which are crucial to building long-term wealth. Now, as we talked about earlier, we have a debt service to the bank, right? So a portion of that is principal and the rest is interest. Now, if you guys are not familiar with how an amortization schedule works with a mortgage or a loan from the bank, each month over the course of what's typically a 30-year period, you're paying a portion toward principal and a portion toward interest. Now, at the very beginning, you're paying the most toward interest and very little amount toward principal. And each month, the principal goes up and the interest goes down every single month. Over the course of the loan, that principal is actually paying down the loan amount that you had from the bank to buy the house. Now, that principal is yours to keep. So the renters are paying off the loan for you. Remember, the mortgage counts as part of our monthly expenses, but we get to keep that principal amount that's paid off, right? So they are actually paying off the house for us and building our equity stake in the property. So we need to account for this number because this is actually growing our wealth and what's going to grow our wealth significantly over time. And the other thing we need to account for is appreciation. And I personally talk about appreciation as icing on the cake because technically it's an unrealized gain until you refinance and based on the new value of the house, or you go to sell the house and then it's appraised and then you could capture essentially all that appreciated value. Now, what's really cool about investing in real estate is while you may only put down 10 to 20% for that real estate investment, you capture 100% of the appreciation. Now, what do I mean by that? You put down $20,000 on a $100,000 house. If that house appreciates 10%, you get to keep all $10,000 of that appreciated value, even though you only own 20% of the house at the time. So keep that in mind. All right, so for the principal pay down for our first Nashville house that we talked about was $534.72. And for the second property, it was $491.40. And for the mountain house, it was $867.78. And these numbers are principal pay down, basically money in our pocket, right? Our equity stake has grown this much in just the month of November for each of those respective properties. Now we're going to talk about appreciation. And appreciation, again, I typically ballpark around 3% year-over-year growth, and it's somewhat of a hedge against inflation, right? But you got to account for appreciation and your total return on your investment because you get to keep that appreciated value. Now, in each of these markets, in Nashville and in Gatlinburg, in the past couple of years, appreciation has actually been closer to 8 to 12%, depending on the area. Now, I'm only going to count for 3% to be conservative, but just keep in mind this number is going to be quite a bit higher. So the appreciated growth for the month of November for the three properties was $1,274.63, $1,075, and for the mountain house, it was $1,625. So now we're going to add the cash flow, the principal pay down, and the appreciated value for each property, and we're going to get the total gain or growth in our wealth, or in other words, our net worth for just the month of November. So let's add these numbers up. And again, for the first property we talked about in Nashville, the total growth in wealth was $4,065.61. For the second property, it was $4,126.45. And for the mountain house, it was $12,417.06. And we add all of these numbers up to get the grand total in growth and wealth for the month of November of $20,609.12. Now I'll say it again, you guys, if you showed me these numbers a year ago before we got started, I would have said you were absolutely crazy and it was impossible for us to achieve these numbers. And I truly mean that. But sitting here today, I can promise you guys that if you have interest in investing in real estate, it doesn't have to be short-term rentals. It can be, long-term rentals. It could be commercial properties. You could do wholesaling, all this other stuff. You just have to get started and you're gonna see the compound effect over time and watch your wealth grow. But I cannot recommend enough taking a look at least at short-term rentals and listing properties on sites like Airbnb and VRBO. Your returns can just be crazy, especially if you get in the right market and get the right property. So again, you guys, I truly hope you appreciate the transparency that I provide. Again, I don't really see a lot of transparency on YouTube or social media. It's honestly hard to come by. They're usually just clickbaity to try and get you to watch their video. So with that being said, if you guys found any value out of this video, again, if you haven't yet, I would appreciate if you subscribe below. It means so much to me and it helps me grow this channel. Again, like, comment, if you'd like to ask me questions, I'll try and answer to the best of my ability. But again, thank you guys so much for watching and best of luck to all of you on your path to achieving financial freedom. We'll catch you guys next time.